Welcome to the Learn to Win Trading Statistics video, where we're going to be discussing the statistics on our trading signals and show you what we're looking at as far as the consistency of our signals. First of all, we always tell our students to plan your trade first, then trade your plan. What you want to do is already know before you ever make a trade what your profit target is, what your stop loss is, accept the risk that you're taking in that trade. Know what you're going to do when the trade goes sideways against you or for you before you ever make that trade. But how do you do that? Well, you have to develop a plan first, and you base that plan off of statistics. You look at what the signals of your strategy are doing, and then you can then determine the rules that you want to apply to your personal trading plan so that you then have a plan to trade and then trade that plan. With statistics, you're going to build your confidence in the strategy you're using to trade. You're going to build confidence in your discipline to trade those rules and trade your strategy. And you're going to give yourself important information that will allow you to make a high probability trading plan for yourself so that you will be able to capitalize more on the trades out of your strategy and knowing what to look for, and then regularly go over your trades and redo your statistics, because the market goes through cycles and you may have to adjust here and there to the market so that you're still capitalizing as best as you can on your signals. We're going to analyze 25 of our recent signals and show you what's running, but first of all, you need to know that we're only looking at the signals within the first hour of the market, 9:30 to 10:30 a.m. Eastern Daylight Time. That's about the only time we trade, is the first hour in the morning. Okay, the first 25 signals we've seen since August 24th, 2009. We had one signal on the 24th that ran 1.25 points. We had 4 signals on the 25th, 3 wins, 1 loss. We had 1 signal on the 26th, 1 on the 27th, 2 on the 28th, 1 win and a loss on the 31st, 1 on the 1st, 3 on the 1st. We had 2 wins and a loss, 1 on the 2nd, 1 loss actually on the 3rd, 3 trades, 2 wins and a loss on the 4th. On the 8th, 1 win. On the 9th, 1 win, 1 loss. On the 10th, 2 wins. And on the 15th, 1 win. Now, we had a holiday in there, and there were a couple days actually that produced no signals within this time. But this is basically 2 weeks worth of trading. Actually, 2 weeks and 2 days worth of trading. 2 of those days didn't produce any signals, and they're not on this chart. But out of 2 weeks and 2 days, what we're looking at is a total of 19 wins and 6 losses. That brings us to a 76% winning average for our signals. The total maximum potential of our trades, if you took them and ran them all the way to the end, would be 45.75 points, or 458% return on your money. Now that's a huge percentage, a huge return on your money. But let me bust your bubble here for a second, because it's not realistic that you'll be able to maximize every single trade you take and capitalize to the maximum potential. So don't think that you're going to be able to make 458% return in 2 weeks using our system. You see, my strategy is this. I don't compare myself to one of the big players at Wall Street. I don't even want to try and compare myself to the big players at Wall Street. They've got way more capital than I have, way more intelligence and knowledge on the market, and I'm just not going to be able to compete with that. But my strategy is to take a system that allows you to identify where the big boys on Wall Street are going to take the market. And once you've identified where they are taking the market, then you can jump in and pick up some of the scraps. We're small fish traders here, but by picking up some of the scraps from these big boys on Wall Street, we can do pretty well. Let me show you what I mean by this. Here's our trading statistics over 2 weeks and 2 days. And if we just realistically set a profit target at 1 point, that's all, 1 point, and a stop loss at 1 point instead. So every winning signal that we see here, we're going to make a point off of. And every loss, we're going to lose a point. Then what we're going to come out with is something a little different and much more realistic. This is a conservative estimate to show you how our signals can work. At this realistic type of bracket, a 1 point win and 1 point stop loss, still producing a 76% winning average, our total profit then is going to be 13 points instead of 45.75. With 13 points, that's still producing a 130% return on our money in 2 weeks and 2 days. Let me show you about how this works in money terms so that you understand the potential here. Okay, a 13-point profit, 130% return on the money. We're trading the E-mini S&P 500, which is a financials futures contract. You can control this contract for $500. Now this contract is actually worth a lot more than $500, but that's the margin to control this contract. That's what you're putting up in the market. Controlling a contract at $500, a 1 point win, a 1 point gain is equal to $50 or a 10% return on your money. Okay, so we've got a huge potential to make a large return because we're trading on margin here. Also means you can make it a large loss for yourself. So you've really got to understand the strategy you're trading. So if we take one contract at 13 points in 2 weeks and 2 days, we're grossing $650 off of trading a $500 contract. That's pretty good. But this is the key. This is the strategy that you want to follow. Once you get comfortable and consistent enough to make 1 to 2 points a day, that's all you need, then you slowly and gradually start increasing the number of contracts you're trading. So you start out with one, but then you start adding more and more. So instead of trading one contract at $500, now you're trading 2 contracts at $500 each, or $1,000 in the market. At 2 contracts in 2 weeks and 2 days, 13 points, you are going to gross $1,300. Let's add another contract at 13 points, almost $2,000, etc., etc., etc. Now, you can make a great living doing this because as you get confident and consistent in making those trades, let's say you're able to now trade 10 contracts. In 2 weeks and 2 days at 13 points, you will have grossed $6,500. That's a pretty sweet side job. That's a nice deal right there. Okay, now the KISS strategy stands for Keep It Simple. It's a simple strategy designed to teach beginners just a simple process to pick high probability trades in the market. And our signals are going to produce the opportunity to average 10% per day or more, make money when the markets go up or down, and do that trading no more than 1 hour per day. If you'd like to learn more information about our trading system and our classes, sign up for our free 5-day video crash course at our website or email us at info@learntowintrading.com.